Now, I personally am a huge fan of combining multiple different stocks and or ETFs all within one portfolio to offer myself as an investor exposure to growth but also massive income from day one. Now, throughout my portfolio, you're going to see different names in here that are going to offer more growth. Some names offer dividend growth and some names offer pure income right from the start the minute I bought the shares. Now, I like having a mix of both income and growth because long term, my net worth will hopefully grow, at least based off of historical models. But along with that, I'm able to build out a portfolio that, as of right now, pays me north of $7,400 per month in dividend income. Now, in this video, we're going to go over a very simple yet ultra powerful 3 ETF portfolio, just 3 names, that could potentially offer an investor like yourself or like I massive exposure to growth and capital appreciation, but also huge income from day one. So if you're personally an investor that wants exposure to growth, but also doesn't want to wait forever to get your dividend income up very, very high, make sure to stick around, drop a like down below, and let's go right into this one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, like I said, this portfolio is going to have 3 simple yet very powerful ETFs. The first one being the Schwab US Large Cap Growth ETF, or ticker symbol SCHG. Now, SCHG is a monster as far as growth goes, and the objective is to track as closely as possible before fees and expenses the total return of the Dow Jones US Large Cap Growth Total Stock Market Index. The ETF is super cheap to hold on to at just 0.04%, and some of the highlights are a straightforward low-cost fund offering potential tax efficiency. The fund can serve as part of the core of a diversified portfolio and allows simple access to large-cap US equities that have growth characteristics. This ETF has over 200 individual stocks within it, so you are getting a very diversified basket of holdings, although the top holdings make up the majority of the ETF, and most of these top holdings have performed amazing over the last 10 or so years. We're talking about names like Apple, Nvidia, names like Microsoft, Amazon, Meta, Broadcom, Alphabet, then names like Tesla, Eli Lilly, and Google. Names that, at least unless anything changes anytime soon, will probably keep trading up and to the right, at least in my opinion. Now, the reason I say that SCHG could be a great ETF to have in a 3 ETF portfolio that's giving you exposure to massive growth and massive income is because this ETF specifically offers massive growth, at least it has historically, over the 1 year, up 40+%. Year to date up 27%. This ETF has outperformed most other ETFs across the market. I mean, this ETF is up over 700%, and this is since 2009. The next ETF that I would include in this simple yet very powerful 3 ETF portfolio would be an ETF that offers capital appreciation, some upside, but along with it is going to offer investors massive dividend income pretty much from day one. Now we're talking about DIVO, the Amplify CWP Enhanced Dividend Income ETF, one of my favorite ETFs across the entire stock market. I own a lot of this one, and I don't necessarily think this ETF gets the recognition it deserves. Now, it says why invest in DIVO: income potential, comprised of high-quality dividend-oriented stocks, along with cover calls on individual stocks. It also is actively managed, and this allows the portfolio manager to identify opportunities and risks and act on those decisions in real time. Now, it also says seeks to lower volatility. Because of the dividend and option income, it may provide lower share price volatility versus the overall market during broad-based market declines. So what's cool about DIVO is that the fund basically invests in a small number of stocks. As of right now, we're talking 26 different names. Then along with that, they sell individual cover calls on these individual stocks. And because of this, names like Visa, Microsoft, Caterpillar, etc., names that wouldn't otherwise offer much yield, much income for investors, because of that cover call overlay, DIVO is able to generate a lot of income for investors right from day one. Now right here is DIVO's selection methodology. It says DIVO is managed with a strong emphasis on owning high-quality large-cap companies with historical dividend and earnings growth. Sector allocation: DIVO is relatively balanced among the traditional 10 S&P sectors, with CWP determining which sectors to over and underweight based on various factors. Now it also says security selection: DIVO consists of just 20 to 25 stocks, which are screened and adjusted according to attributes including market cap, management track record, earnings, cash flow, and return on equity. Then lastly, tactical cover call writing: Covered call options are written on individual stocks on a tactical basis, not on an index approach. So a lot of these covered call style ETFs, things like JEPI, JEPQ, qyld, etc., they're writing calls on an index where DIVO does it on individual stocks. Now, even though DIVO offers a ton of income, which I'm going to share with you right here in a second, the ETF is also up over 61%, and this is over the last 8 or so years. But the magic when it comes to DIVO is the 4.6% trailing 12-month dividend yield and the monthly dividends that DIVO has paid and DIVO has grown over the past several years. Now, another reason I absolutely love DIVO is because it pays a dividend on a monthly frequency. Now, this could maybe be more important to some investors, maybe less important to some investors, but for me personally, an investor that's looking to use their dividend income to pay for things like bills in the future, building out a long-term portfolio with the most monthly payers as possible is definitely going to be helpful. Now, as far as dividend growth goes, the payouts have been higher and lower over the years, but for the most part, you're kind of going to expect around 14 to 15 to 16 cents per share on a monthly basis for an ETF that costs around 40 to 41 bucks. So what's cool about DIVO is that if you are an investor kind of like myself that wants exposure to growth, that wants exposure to capital appreciation, but also wants exposure to income, DIVO is a great ETF to look into. Now, the last and final ETF that I would include in this very powerful 3 ETF portfolio would be the JP Morgan NASDAQ Equity Premium Income ETF, or JEPQ. Now, JEPQ offers exposure to the NASDAQ 100, but with less volatility because of the cover call overlay. This ETF not only has grown over time, which I'm going to share with you right here in a second, but it pays around a 10 to 12% yield, depending on what time frame you're looking at. For every single share of JEPQ that you buy, which is somewhere in the mid-50s, you're looking at a 49-cent dividend, a 55-cent again, 42, 42, 45. The dividends historically have been massive when it comes to JEPQ. Now, this ETF is going to give an investor, again, a lot more income exposure, which is why I think combining something like this with DIVO and with something like SCHG gives an investor sort of the best of both worlds, offering exposure to massive growth, but also some income potential too. But not only that, JEPQ has also grown over time. On the 1 year, this ETF that is primarily focused on income generation is up around 15% in the 1 year. Max time frame, it's up around 10%. And remember, investors like myself, because I'm an owner of this one, I've been getting paid 8%, 10%, 12% in dividends per year. Now, if you're an investor that wants safe exposure to the NASDAQ and are interested in the cover call strategy, JEPQ is probably one of the best ETFs to do it across the markets. So those are 3 simple yet very powerful ETFs that, if combined, could definitely give an investor exposure to massive growth potential, but along with that huge income right from day one. Now, it's completely your own choice as an investor, whether you want to be like me and own over 45 different stocks and ETFs, or as an investor, you could be as simple as owning a few powerful ETFs and call it a day in your portfolio. But regardless, the best piece of advice I have to you is figure out what your objective is, what your strategy is, whether you're searching for income or whether it's growth. Figure out what's important to you and your investment objective long term, and find the perfect stocks and or ETFs that match it. But now lastly, I have a question for you guys down below. If I were to ask you to build me a 3 ETF portfolio that's going to offer me growth potential but also income from day one, which 3 ETFs would you choose? Drop the ticker symbols in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.